So, hi, Fernando. It's a pleasure to talk to you. Just for our listeners to have some context before we start our conversation. I was reading a newsletter, and it was a text written by you. So, and I found it very interesting. So I decided to get in touch. So that's how I found you. Um, and before we start our conversation, can you give us um, a little color about your background? Can you tell us what's your background? What do you do?
Yeah. Hello, Victor. Thank you so much for hosting me on your channel. It is a pleasure to be here, a pleasure to talk about FCL Capital, and most of all, a pleasure to talk about investments, our mutual passion for sure.
Yeah.
So yeah, just a little quick background about me. I was born in Rio 44 years ago, and started my career, my journey, like a couple of decades ago as a CFO of investment real estate company based in Brazil. Then spent a few years in New York City, working for a few hedge funds and family offices. And then 8 years ago, decided to come back to Brazil to start my own investment company, which is called FCL Capital. FCL has a very interesting investment framework. We are quite a different company as compared to most investment companies, I would say, abroad and mostly of all when compared to Brazilian companies. We do an intersection of misunderstood companies. And what are those? Maybe small caps based in emerging markets, new technology companies that are quite not yet understood by most global investors, and some other exotic situations. So, like we always usually say, for an alpha to exist, we need a reason. It really does need a reason to exist. So why is your source of alpha? So in our investment framework, we're constantly trying to find reasons for an edge and reasons for the alpha to exist.
Yeah, I completely understand you. So basically, you focus on under the radar stocks, just like me, right?
Yes, most of all under the radar companies, also some new technology companies, or in some circumstances, some of what we call macro theses. What are those? Those are like framework ideas we hold in our firm that guide us through a bunch of different investments. So a quick example of this would be our investments in Moncler and Technogym. Those are two Italian companies. Both of them are based in Milano. And
Just wait. We will soon enter in that. Okay.
okay,
Um,
okay,
sorry
sure.
to interrupt you, but sorry. But just for us to understand a little better. So you manage a fund, right?
Yes, it is a global equity investment fund. So we were basically one of the first global equity funds in Brazil. So until like 8, 9 years ago, Brazilian funds were restricted from investments abroad. They were supposed to hold all of their assets inside the country. So changing the local regulations changed like around 2016, and we are still one of the few
Brazilian,
companies in
Br- uh,
Brazil that can invest abroad.
Brazilian funds were forbidden to invest abroad. Totally.
They were, of course, some high net worth Brazilian individuals had investments abroad. They used to send money abroad and even built companies from scratch abroad. And of course, they could hold investments abroad. But as for domestic funds that are regulated by the CVM, which is a local version of the SEC, and ANBIMA, and all the local regulatory framework. So those general public investments, when it comes to investments, they were restricted from investing in funds that had positions abroad. So, for example, a Brazilian equity fund manager, he sometimes would hold positions in traditional Brazilian companies like Petrobras and Vale, Brazilian companies. But until 2016, if a Brazilian fund wanted to invest in a company like Google or Meta or Uber, they were restricted until a few years ago. And we were one of the very first companies that launched a global equity fund from Brazil.
Wow, I didn't know about that. I didn't know that Brazilian funds were totally restricted to invest abroad. Now they are not, right? That's a huge evolution, right?
True, so true.
And before we start talking about your particular investment ideas, your investment thesis, can you explain us how is your investment method? I know you've talked about that a little, but can you explain us where do you begin when you are trying to find a stock? What are the essential traits you look for? Can you tell us a little about that, about your method of selecting assets?
Yeah, this is a great question, and this is the $1 million question, basically. So yeah, it is probably a long answer. First of all, we have what we call our pillars for investing. So conviction and concentration. Why is that so? Because you need to give space to your investment ideas. So in our fund, we hold usually something like 10 or 12 different ideas. Most mutual funds will hold something like 70 or 80 different ideas. And why we don't do that? Because even if you have a brilliant idea, which is hard enough, when this brilliant idea is like 1% of your investments under management or 2%, you won't make a lot of difference. So yeah, we believe in concentration up to a point. Of course, we wouldn't concentrate above something like 15% of our AUM in a single position. We talked about our focus, our search for yet misunderstood ideas. We like those two. And also, we like to play in the intersection between private equity and public equity. So some very long-term investments, some theses that while the market's so focused in the next quarter or even the next year of results, we spend most of our time trying to find the technologies and the ideas and the things that will shape the century. So that's what we call our investment edge. So like every company, we of course have our screenings at Bloomberg and Coifin and other capital providers or other software providers. So we have some proprietary formulas. So we basically look for a combination of value and growth. It's a philosophy called growth at a reasonable price, or GARP. Value investing. It's basically a combination of very classic value investing, Buffett style, and also some growth investing. So when we run our method, we find that the best ideas, they need to have some combination of the two. We need growth, we need promising, and we need good quality companies, of course. But also, if you pay too much for that, it won't work. So we definitely need and look for a combination of the two, something in the middle. Of course, some things in our portfolio look a little bit closer to classic value investing, and some things are more geared towards growth investing. But it's also in some combination of the two. So we mix all of this and look for thesis.
Very interesting. I also have a very similar way of thinking about investment, right? And a very similar method. And from what I can tell, your fund is very well diversified geographically, right? Can you talk a little about that? Because that's a very interesting point.
Yeah, this is a great point. I mean, the easiest thing to do for any investor, any global investor, is to overweight the US. And there are very good reasons for that. I mean, it's the most important market, something like 60% of global market capitalization. So most of the best companies in the planet are there. So we have a bunch of, and most important of all, probably, over the past 10 or 15 years, it was a top performing market. And most investors are very biased to fighting the last battle, let's call it this way. So that being said, we try very hard to look for where we have an advantage when we're fighting. So of course, in this profession, there's outstanding talents, amazing minds are all the time looking for the best investment ideas. So again, the eternal question, where's our edge? So being born and raised in Brazil, just like anywhere else, we think there are some advantages to that. There's always gonna something to be said about the guy who grew up in Seattle and saw Starbucks before anybody else, or someone from Arkansas that saw Walmart, and this goes on and on. So being based in Brazil, for example, our thesis in Uber or Match, we saw those companies, the growth of both of those companies exploding way before analysts based in London and New York were putting this in their Excel spreadsheets. So yeah, I'm not saying it's the best position for a global analyst. It's more humble than that. I'm just saying that, like any other place, there's some hidden advantages of being a global manager or a global personal investor based in Brazil.
So you were invested in Match Group. I had forgotten about that.
Yeah.
Do you remember when did you start your position, and when did you close it? Can you talk a little about how you discovered this opportunity in Match Group? Because Tinder was a huge success here in Brazil.
That is very true. I mean, it's a very long story. Way before the IPO, we saw a presentation, maybe that was 12 years ago, by one of the founders, a guy called Sun Rates in California. He is basically one of the Tinder founders. Way before there was a Match Group, and we were already a cornerstone investor during the IPO. So we are very proud of this thesis. It's probably the most important thesis of our history, because to this day, when we run performance attributions, it is the top performing thesis in the history of our fund. So we were a very important cornerstone investor since the day one of the company. The IPO, the IPO happened back in 2015 or 16, and if I'm not mistaken, the IPO price is $12. So we carried the position and sold most of our stock at $97. So it was a huge profit for the fund.
Wow.
And basically, that was a very important position for us. And I remember back in those days, like 2017, first sell-side research on Match Group was done by Goldman Sachs and JP Morgan, if I'm not mistaken. And those analysts were projecting international revenues at 20% of total company revenues on perpetuity. Nowadays, it's probably the opposite. Nowadays it's probably the opposite. It's like global revenues are something like 75% of total revenues. It's been a while since I'm not that familiar with the financials, since we don't have the position anymore. But that's the ballpark. So it shows that being based in an emerging market has some hidden advantages.
And as far as if I'm not mistaken, the biggest exposure of your fund is China. China is a very polemic subject. Can you tell us why are you so heavily positioned in China? Which companies are you long in? And what do you think is going to happen? How do you see China in this environment we are in, right, in this second Cold War? I mean, can you comment a little about that?
Sure. It's going to be my pleasure. And truth be told, we never got as we have many polemic positions. We don't shy away from that in our company. It's very acknowledged, but we never got as much heat from any of our positions as we get from our own investors when it comes to China. So yeah, I'll be the first to admit it's a very misunderstood thing, our heavy exposure in China, in our positions there. So starting from the beginning, yeah, it is around 30% of our funds exposure. And this is not even an economist, and I'm not even an economist by training, but it's more like a long-term value investor perspective on China. Well, first of all, let's do basic math. China, as we speak now, 2025, has a GDP per capita of something like 12, 13,000 USD per capita, same level as Brazil. While the US has something like 55, 60,000 USD GDP per capita. Obviously, over the past 25 years, the US economy outperformed Europe very heavily because it has an economy that's intellectual property intensive, technology intensive, while the European economy it's heavy on banks, insurance companies, consumer industries, and so forth. So China has been outgrowing everyone else. It still grows something like 5.5% a year. And the first billion-dollar question is, will China continue to grow? So basic math tells us that when China reaches Portuguese levels of GDP per capita, something like $20, $25 USD GDP per capita, it will already have like twice the size of the US GDP. Why? Because it has more than 4 times the population. It is, unless you really don't want to believe in it, and I acknowledge it's going to be a very different world. It may have many implications on different fields, but unless you're very, I would say, ideological, as many people are in this debate, which I don't think it's my job in this case. But unless someone is like this, it's very hard to see any world or any possibility that China won't reach this level. They're leading most. There's this Australian university that keeps tracking the 64 most important future technologies. So the US was leading something like 60 10 years ago or 15 years ago. Now China is leading like 47 and the US is leading like 13. So they're leading in electric cars. You just need to see the world. Electric cars, supercomputers, solar batteries, solar panels, many crucial things. This is a fact. So how can a country that leads in the cutting edge of scientific research, has some of the most formidable companies on earth, keeps growing like 5.5% a year, invests in R&D like crazy, and so many other things, has a scale advantage because the US has shown during the 20th century that scale advantage is a very important thing. So they have all of those things. Why? One of the reasons the American companies are so formidable when compared to European ones, they have scale. So even when compared to Brazilian ones, I mean, if you win your market in California, that's already more than the Brazilian GDP. If you were a leader in the national economy of the US, well, you are already a leader in 30% of the planet's GDP. Of course, you're a very strong contender. You can go to Europe and conquer this market. It's a scale advantage. And the US over the past 100 years has proved that this is a very important factor. So China will have even more of a scale advantage. So when you combine all of those things, I mean, it just seemed to me like a nursery of billion-dollar companies. Some of the best companies on the 21st century are going to be born there. And I just think it's so silly. I acknowledge there's so many specific things, corporate governance questions. I mean, I'm not saying we shouldn't give a discount when comparing Chinese companies to European or American ones. This is a different conversation. My only point is that dismissing those companies and this economy, which is going to be the most important company of the century, just dismissing out of hand before even looking, just seems to me like a very silly proposition.
And Fernando, do you have first? How are you positioned in China? And second, in your opinion, at which stocks, at which names should we be looking at?
Great. Wow. China is a very specific market, so one should
I know
really
there's
be
a
careful.
hundred of companies there, but if you
Yeah.
can just cite a few names,
Uh-huh.
that would be great.
Yeah. It's a very specific market. So yeah, one should approach a little bit differently than developed markets. For example, banks in China. Banks are seen by the Chinese Communist Party more like utilities. They are not supposed to make too much money. They're supposed to give credit to the economy, and they of course they don't want to bank run, but they also don't want to give a lot of net interest margin to the banks. So there are many things like this. They're seen like they are not supposed to make too much money. So yes, one should be careful when approach the market differently. So in our Chinese research, we tend to gravitate towards two industries, consumer and tech. And why is that so? Well, we talked about a little bit about the power of consumption, the American consumption. If we look at the past 50 years, the big winners were American consumption companies, McDonald's, Coca-Cola, Walmart, Disney. And we think, well, China is still a very low consumption economy. I mean, they have a GDP that's on par with America. If we take by PPP, by purchase power parity, it's already a bigger economy than America, but if we take it market exchange, it's a little bit smaller. But anyway, when we take consumption to GDP, the ratio, China is still a lot lower than the US. And you see their leadership, they keep talking about increasing this number, especially with global trade wars. We've been reading about in the news. So they used to export their way to growth. But now, this strategy is clearly getting to its limits because they are already so big that there's not enough of a planet for them to export to anymore. So the only solution they have, and they know it, is to increase internal consumption. And Chinese consumption is already changing the world. So we have huge positions, as you know, in European luxury companies. Part of their thesis is the increase of wealth in Asia, and especially China. So companies like Moncler, a very important as slice of their revenues is China, something like 35% of their sales and growing. So yeah, we position ourselves in China in companies like Anta, which is basically the top sportswear company in the country. It used to be number 3. Yes. The ticker is 2020. It's listed in the Hong Kong Stock Exchange.
Okay, 2020.
So we do the direct investments in the Hong Kong Stock Exchange. So this is a very fascinating company. We've been in contact with the founder. If this guy was a Western businessman, his face would be on the cover of Forbes magazine and every business magazine. He started on his backyard, on his own home, doing shoes and creating an empire. He's a billionaire now, and his company is basically fighting with Nike and Adidas in China. He's also has the exclusive rights on perpetuity for the Fila brand, the famous Italian company Fila, to sell in China. And recently, they bought a Finnish company called Emmer. This Emmer is the owner of Wilson tennis rackets and some other brands like Salomon. So yeah, it's a fascinating company. It's in a new wave of China also having brands, because if you look and research at the past 30 years, they started doing the low quality, cheap stuff. Some people still see them in those terms. And they kept evolving and doing high-end stuff, and now even having their own brands.
And the sports product, right? It has a 261 billion market cap. Wow, I've never heard of that. And I'm talking here to you, and I'm only thinking, man, I should really look more carefully to China, because yeah.
I'm glad I'm making my case.
Wow. And you also have a quite big position in BYD, right? Can you tell us a little about that?
Yeah, the Chinese were, for a long time, they have been number one when it comes to engineering and process and construction.
When did you start your position in BYD?
That was probably like 2 years ago. 2 years ago, I was very skeptical when it comes to Tesla, and please, this doesn't have any relation at all with politics. It's completely an investment-driven thesis. But I was skeptical about the company because they were having trouble with production and increasing their sales, and the Chinese were very fast at replicating and getting better at production. BYD has a very interesting background. Charlie Munger, before dying, used to say that the best thing he has ever done for Berkshire was introducing the BYD founder to Warren Buffett. And that was not public, but about those two brilliant men, if there was any public disagreement, I mean, not public, but if there was any real disagreement between them, it was about China. Warren never really believed in China or the opportunity in China, and Charlie died saying, well, China is the future. Their companies are better than our companies, our meaning the American companies. And he was very...
Do you know what they didn't agree on that subject?
Well, they never said they didn't agree, and at some point, on some levels, they did agree because Warren did invest in BYD. So I'm not really making too much of my point. But my only point is I've been to a few Berkshire meetings and I've watched quite a few on YouTube, and Charlie was clearly a lot more direct. When investors in Berkshire asked, why do you invest in China? Well, because their companies are better and cheaper. And their economy is going to surpass our economy. So yeah, Charlie was clearly more direct, and Warren was, at the very least, was more political when it comes to his assertions. But yeah, BYD is a fascinating company. I mean, it's a very... an incredible, amazing founder, and they're changing in the industry.
Its ticker is 1211.
1211, that's correct. Also on the Hong Kong Stock Exchange.
Can you invest in BYD in the United States?
I'm not sure. They used to have some over-the-counter tickers, but I'm not sure those days. Since we are a fund, we don't have those advantages of maybe individual investors that have smaller positions. So we need some liquidity in our positions because of our size, unfortunately. So we only invest in the Hong Kong Stock Exchange. And the company has been doing very well. We have been monitoring monthly sales, and they have been growing like 30-40% a year. They are on track to sell 5.5 million vehicles this year. And the future of Tesla was very, at the forefront of things, at the high end of things. a very vanguardist thing. But the future is going to be more diverse. I mean, families with 3 kids that need a SUV, sports cars for single people, and so many different use cases, and different circumstances. And BYD is more geared to that. Well, Tesla only has 3 different models, 3 different kinds of vehicles. So it is now already quite clear that the growth ahead is going to be with BYD and other Chinese companies, and not with Tesla, which has seen their sales stagnate over the past year.
And from what I can see here, wow, BYD went up a lot, right, in 2 years.
Yeah.
I mean, it went up more than 100%. Am I right?
You are absolutely right. I mean, investors have short. We haven't sold a single share. It's a top 3 position in our fund as we speak. I mean, investors, they have very short memories. So until like 2-3 years ago, when we started our position, it was a very polemic idea to see BYD as a competitor to Tesla. So in 2025, BYD has already surpassed Tesla as a #1 global electric car company. But until 2 years ago, that was not seen as even possible.
Back then, people didn't believe BYD would surpass Tesla.
They did not. BYD, is very important to remember, started as a battery company. And I remember like 5 years ago when we started looking at the company, and truth be told, Berkshire and others, some smart investors that were invested before us. But 5 years ago, it was already still seen as a battery company. All those battery guys, they were never going to be able to compete with legacy car makers, and let alone Tesla. Tesla was seen on a class on its own. And as we speak, there's still a huge valuation difference. Tesla's worth something like $700 billion with a B. And with smaller sales, smaller revenues, and a smaller margin than BYD, which is worth something like $100 billion USD, give or take. So there's still a huge difference over there.
And where do you plan to hold BYD? In your opinion, is there still a lot of upside to be holding the stock?
Well, traditionally, we hold our thesis for many years. Unless we see a mistake, unless we notice we made a mistake. So those ones are shorter. But yeah, it's been 3 years and counting. We still plan to hold for a few years. We hope we don't have to sell. We hope we're not stupid enough to sell, because things are looking up. I mean, they have competition, internal competition in China. They just opened their factory. They are actually building 2 factories, one in Hungary for the European market, and the other one in Brazil, in Northeast Brazil, for the Latin American market. I mean, those factories are going to complement, and they're going to probably reach 800,000 vehicles sold outside China, and 5 million, including China, in 2025, and growing very fast. So we still see a lot of upsides. We still see a lot of growth for the company. We still have a lot of admiration for its founder. So we don't have any reason to sell at all.
Do you have any kind of price target? I mean, if the stock skyrocketed today to $200, $300, Hong Kong dollars, right?
Yeah.
I mean, would it still be a hold, or that would be a very good price for you to sell it?
Well, okay, again, it's a growth at a reasonable price. So of course, we always have a close look at valuation. We always have an eye on that. It's not that we don't care about valuations, of course. I mean, we consider ourselves value investors. So yes, it's always a parameter and always part of our framework. But that being said, we don't have a specific number or share price target in mind, and we see a huge growth avenue when we compare to Tesla. So probably people should ask this question more to Tesla shareholders.
Yeah. I actually made a video saying that Tesla was like super expensive. It's incredible the premises Tesla investors are counting. I mean,
Yeah.
for Tesla to still have any kind of upside, I mean, it must deliver amazing, amazing, an amazing
Yeah.
growth. And I just
So
don't.
many things have to go right.
Everything has to go perfect. So I really
Yeah.
see Tesla stock going down in the coming years, right? Now, one very interesting position that I found in your fund is Daikin. Daikin, from if I'm not mistaken, is the biggest, is a Japanese company, and is the
Mhm.
biggest air conditioning company in the world.
Yes.
What's your thesis for Daikin? As far as I can tell, the thesis involves the increase in air conditioning usage in developing countries, right? So it's a bet on developing countries. Am I correct?
It is. It is. So again, when it comes to investment edge, we like G7 companies, but especially the ones that have a relationship with emerging markets, not the ones that are so internally focused. And yeah, the AC market is very strategic, and human beings, they are very good at dramatic news that happened yesterday or this week. But we are, as a species, are very, very bad at slowly burning long-term evolutions. So no one makes headlines when with news like there's a lot less hunger now than 50 years ago, or 99.9999% of airplanes made to their destinations with no harm and no problem. So as a species, we are very, very bad at noticing long-term trends. And yes, the increase of wealth in the planet, especially Asia, has been amazing for the past 35 years, and it's going to continue. And I'm not talking only about China. I'm talking about India. I'm talking about the Middle East. I'm talking about Southeast Asia. And I'm talking about Africa. And and Latin America too, to a lesser extent. And if there's one thing in common about all of those regions, so if we agree, that's where global growth is coming from. Of course, no one's saying the USA is going away, or Europe's going away, or Japan is going away.
But most of the growth will come from
The
developing
growth, yeah,
countries.
the future, the difference, the delta is coming elsewhere. That's very obvious. And what is there something in common about all of those regions, you might ask? Yes, they are very close to the equator. All of them have very warm climates. So I go to Dubai quite often because it's the best way for someone that lives in Latin America to go to China. We do a stop there, and then we change planes and go to Asia, since we don't usually have direct flights from Brazil to Asia. And it is a miracle. I mean, 50 years ago, this place was a fisherman's village, very poor before they found oil. And then there was oil, and then they opened their economies, and this is miracle now, with billionaires moving there, no taxes, etc. And you see those amazing air conditioners everywhere. It's 45 degrees outside, but you feel cold since the ACs are so good. And
That's true.
this would never be possible. This would never be possible if it was not the advent of this miracle invention. So this invention, it changes the past 100 years. I mean, even in the US, where's the US population moving to? They're moving from the Northeast, cities like high-tech cities like Boston, like Chicago, like New York City, to places like Texas and Florida. And of course, also this wouldn't happen if it were not for the AC industry. So ACs, they changed the century. They changed the way people live, the way, changed the possibilities, how people can work. And this growth is coming. I mean, India is going to grow, China is going to grow, and we've been monitoring penetration rates. So most houses in Japan, like 90% of the houses there, already have an AC. And probably most of the ones that don't have are in the colder places in Japan and don't care about this anyway. And US the same. 85% of the houses in the US already have an AC. And probably the 15% that don't are close to Canada, are in mountains and places like these. And most of those, well, some would like to have an AC, but even those 15%, most, they don't care. They don't need an AC. But in India, in Africa, in the Middle East, in Southeast Asia, practically all of China, and practically all of Latin America, everyone that doesn't have an AC would love to have one. And it's very funny because at different levels of GDP per capita, some things explode in consumption. Some goods even decrease in consumption. For example, there's some substitution effects. Poor Brazilians eat a lot of rice and beans, but as they get wealthier, they eat more meat and even less. The consumption of rice and beans decrease, but they travel a lot more and they buy a lot more yogurt. So different goods have different tables about this. It is not linear at all. So when you cross something like $10,000 US GDP per capita, the consumption of ACs skyrockets. It has been the case everywhere on Earth. And Europe has a smaller consumption when compared to the US because it is not as warm. So except for the south of Europe, but North Europe, people don't have a need for ACs. But yes, in most places that are going to grow a lot, people have a lot of need for ACs. And like it's very interesting because when you look at AC companies in the world, the American ones, they have a lot higher valuations. Companies like Train, Sprint. And why? Why is that so? Because they are better managed. I'm giving you this. They're the best managed, as usual. The US companies are the best managed. So what's the sell side doing wrong? Sell side's comparing those companies. Oh, the US companies, they are the leaders in the US and they have higher margins and better management, and we're gonna give them higher multiples. But there's one very overlooked factor. Daikin might not be number one in developed markets like Europe and the US, but it's by very, very far, at least a very strong contender in most markets. So you go to Africa, Daikin is very strong and the US companies are not. You go to Southeast Asia, the same. Japan, China. So the huge advantage of Daikin when compared to the other AC companies, they might be not number one almost anywhere, but they are top 5 contender everywhere. And so they have a lot of exposure to the future growth that a company like Trend does not have. So
do you know at which multiples these other air conditioning companies are usually trading at? Because Daikin has a 30 billion market cap, 30 billion in revenue, so it is trading at 1 times market cap to sales, right? First, do you expect there will be a multiple expansion? Do you expect to see a lot of growth? Where do you expect this stock to reach? Again, is there a price target? I know that's a very annoying question about the price target, but it's an important one.
Sure.
Can you give me a little color on that?
Yeah, sure. I mean, it's also if everything goes right, which is admittedly a big if, it is a 10-year thesis. I mean, what we're trying to explore here is the long-term growth trends of emerging markets and global economic growth. So it's not a 1-year or 2-year thesis for sure. That being said, we are expecting, once the market realizes this, for Daikin to trade at similar levels to the US companies, which by now, as of now, are around twice Daikin's levels. So the Japanese market has been historically a very depressed market. Things are starting to change. Corporate governance is improving a lot in Japan. the past 5 years or so. But yeah, it's still a depressed market when it comes to multiples. And Daikin is still seen as a local Japanese company. So why do you buy this AC company? Because Japan is not growing. I mean, but now 85% of their revenues are outside of Japan.
So it
The
doesn't have
market,
anything to
sooner
do
or
with
later,
Japan. It has to
not
do with
anymore.
developing countries.
Exactly. Not anymore. But it still has Japanese multiples. So that's what we're trying to arbitrate here.
Very interesting, very interesting. Now, moving on, going to another thesis of yours. One thing, I'm really worried about your time. Do you have, how much time do you still have?
Oh, I still have 15 more minutes. So
Okay,
15 more minutes.
So let me ask you, can you quickly talk a little about Moncler thesis, which I thought was really interesting, and then I would like to ask you about the scenario in Brazil. So can you talk a little about Moncler thesis?
Of course. So our journey through European luxury is a very interesting one because this probably started like when we founded our company back in 2017, and we've been holding Moncler for many years now. People were very, very excited as they are now about the US tech, all of those possibilities, and we are excited about those possibilities too, of course. How could we not be? But we didn't have an edge. I mean, there were so many smart people looking for, well, is there any US tech company left that we haven't explored? And those companies were conquering the world. Apple, Meta, Alphabet, companies like this, formidable, amazing companies. And so we started scratching our heads. Is there something in Europe that could be like a cousin or equivalent to US tech? Because the US tech companies, they are so formidable and they were such an amazing investments because they are the best in the planet. Well, you can travel the world and good luck, God help you in finding something better than Google, or a social network company better than Meta, or a retail company better than Amazon. And on and on. I mean, they are the best. They like the NBA players. I usually say. I mean, they can go and they will crush the competition, and they did crush the competition. They crushed competition everywhere else, and the planet is theirs. So, what are industries like this in the rest of the planet? Since we all agree in this, I mean, the one industry we found was European luxury, the consumer industries in general, and the European luxury industry in particular, because they have so many attributes that you just can't replace. Warren Buffett used to reference a moat. What's a moat? It's something that defends you. That when people attack you, meaning the competitors, they can't hurt you because they can't cross this moat. So I have never seen moats like I see in the European luxury industry. You take a company like LVMH. I mean, the history founded in Europe, like in the 19th century, the number of pictures and amazing people and stories behind those brands. If you take a company like Rolex, Roger Federer raising his Wimbledon trophies, wearing one, or historical speeches and presidents that wore a Rolex watch, and things like this, or a San Pellegrino water, or a Prada, or there are so many. There are really, really so many of those. And I see those attributes that no amount of money in the world can replicate this. Let's suppose we have more money than Bill Gates, or we want to build from scratch a Brazilian or an American luxury brands. We couldn't. Not to the level, of course, there are some American designers, very, very talented ones like Tory Burch and Ralph Lauren, but they couldn't even touch the European competition. They might be strong for some segments, of the retail chain, the luxury retail chain, but they can't touch the real hardcore luxury companies like Richmond, LVMH, and so many others, Gucci and Moncler, which is the focus here. I mean, you just can't uh, replicate or create this. It takes 100 years of stories and brands and images. And if you go to Moncler, it's a very interesting story. It's owned by a guy called Remo Ruffini. He's an Italian, a businessman from Milano. It's originally a French company. We had 70 years of history, but it was bought. It was a very forgotten, a very good and storied company, but like 20 years ago was a very forgotten one. And Remo Ruffini bought the control of the company, turned things around, and now it was one of the stars of European luxury. It's traded on the Milano Stock Exchange, and it's been one of the top 5 positioners for the most of the history of our funds.
It also trades on the OTC, ticker MONRF. It is a 50 billion market cap company. How much in revenue? 3.2 billion in revenue. Huge gross margin, right? An 80% gross margin. Wow. Okay.
Yeah.
Okay.
Yeah, you just see those margins in software and luxury. Those are pretty much the two industries you're gonna see those kind of gross margins.
Really impressive. Really impressive. Yeah. So it is. I mean, so that's basically, in a certain way, a technology company trading at 5 times revenue. I don't think that's expensive. I mean, I can find cheaper stocks, but I don't think it's expensive at all.
Yeah, it's a growth at a reasonable price. I mean, it is a premium company, of course, doesn't trade at distressed valuations. How could it do it? How could it be like this? I mean, it doesn't, but I mean, we still think it's very fair to carry for many years this company, and we continue to have faith in the management and the opportunities ahead. I mean, they are expanding to a shoe line and some technical lines. I mean, more geared towards sportsmen in the mountain sports and things like this. So there's still a huge avenue ahead. You go
Are
at
they
their
exposed
revenue.
to China?
They are very much exposed. I mean, something like 40% of the revenues are from Asia, especially China. They are underpenetrated in the US. The US is only 10% of their revenues, which is relatively small. And now their 2 most important markets are Europe and Asia. And Asia is growing a lot. They only have 1 store, if I'm not mistaken, in India, in Mumbai. It's still a huge growth avenue for them over there. Southeast Asia, they're still underpenetrated. Some part of the explanation is since they are a winter clothing brand, of course, warmer climates, they will be underpenetrated in those, but there's still a huge avenue of growth for them.
Yeah, a lot of space to grow, right?
Yeah.
So, just to close our conversation, what do you see happening in Brazil now? And what are your perspectives for Brazil? Because, I'm really worried. I'm really worried about Brazil. Trump just put a 50% tax on Brazil. I was actually discussing about that with my sister. She was pissed off, saying that, oh, Trump cannot do that. He thinks he's the boss here, but he's not, But as far as the way I see it is that, man, in a certain way he is, because Americans are the ones who patrocinar, to sponsor, are the ones who sponsor Brazil, are the ones who are buying our treasuries assets. I mean, And for her, we won't be so much affected because we also trade with other countries, and I'm thinking, man, I think we'll be so affected by that. I would like
Yeah,
to hear
it's so
your
central.
opinion.
Well, that's probably the toughest question you made me today.
Sorry
But
for that.
let's give it a shot. uh, where do I start? So traditionally, Latin America has been a market where capital is very rewarded. Interest rates are high and valuations are low, and there are good reasons for that. They have to be. They have to be for very obvious reasons, for historical reasons. So there's going to be huge winners in Brazil, huge opportunities in Brazil. That's a fact. It's a giant country, 200 million people, some very bright and talented people.
I was
Uh,
screening I was sorry to interrupt you. I was screening stocks here, and I was finding like names trading at 2 times operating cash flow, sometimes
yeah,
even less
it's
than
insane.
that. It's insane.
It's
But
insane.
still, I refuse myself to invest here because first, I'm here. I'm already um, uh, uh, assuming that risk, and secondly,
Mhm.
there's so much risk in Brazil right now. I'm so
Yeah.
pessimistic, right?
Let's hedge it a little bit, Ray.
Yeah, of
Yeah.
course.
So yeah, so the first part of my answer is this: there's gonna be huge winners in this giant country with a lot of potential, and there's gonna be some big opportunities. Even in the past 15 years, we saw the advent of a new bank and an XP, and so there's gonna be a continental-sized country and economy. We're gonna have that one way or the other. That being said, uh, we, the thing I'm most worried and I'm most disappointed about, I mean, I'm disappointed on Brazil in many levels. The mediocrity of the economic growth of the past 30 years. So many, this amazing ability to waste opportunities economically. But the one thing I'm most disappointed about was a clear decrease freedom of expression and governance in the country. So to say, I've been very public over the past 2 years that we're gonna probably move base for good, probably to Europe in the next few years. And the main reason for this is not really economically, since we invest everywhere, but we depend on freedom of thought and expression. So to say one very trivial example. We have a signature of a service. It's an oil-based intelligence company that gives reports on Telegram every single day. So, like many investment companies, we have this signature that they send us today in oil markets and research in oil markets. It's a trivial thing that every asset management company has in some way or the other. So for a few days, a few months back, when they closed Telegram in Brazil, we didn't receive those, of course. So then we installed a VPN and we don't have this problem anymore. And I'm not saying it didn't change directly anything, because a few days without receiving the service of one business provider, in itself, it doesn't change a lot. But it is a climb. It's something that creeps on and grows and grows. So if something is like, so now we only work with VPNs. So it is a progressive thing. It is a progressive thing. So we talk about economy, and I usually don't go in this area too much.
The
But the
problem is
one thing
that
I'm most
economics
disappointed,
and politics,
they are related.
they are
They are
very related.
related. Yeah. So the one thing I'm most disappointed about is the clear decrease in freedom of expression and democracy in the country, even more so than the economy part.
We agree on that. Actually, I just told you, when I screen the Brazilian market, I see a lot of opportunities. But my biggest Brazilian position is actually Gold 11, Gold 11. I'm heavily invested in Gold Jones and Gold 11 since I've been positioned in gold for maybe 4 years, because if there's one thing I'm certain is that the government will screw it up, and that
Yeah.
this decrease in the quality of our politics will reflect
And the
in
currency,
the
of
value of the
course,
currency.
of
So for me,
course.
it's almost certain that gold 11 can only go up because it's almost for me, for sure, we will destroy our currency again. So that's why I'm so heavily invested, and I'm not thinking about selling my position. But that's funny. My bet in Brazil is that the government will screw everything up, and our currency will go together with that. So
Yeah, everything's symmetric when it comes to investments. So it's a high interest country, some big opportunities, very volatile. So yeah, that's that.
okay, Fernando. How can we? Where can we learn more about your fund, about your company?
Yeah, so that was a pleasure, Victor. Once again, thank you so much for this opportunity. So when to learn more about FCL Capital, probably best way is just going to our website www.fclcapital.com. So we have a section called publications. When we have quarterly letters, they are open, no password or anything. You can go to our site and read our quarterly letters. They date back from 2012. So already a lot of history and a lot of discussion about our thesis there. That's probably the first and best way to know more about us.
Okay, and I will leave your website down below in the description. Okay, is your website in English? Can investors from abroad invest in your fund? Because most of my audience comes from the US and from Europe.
Yeah, it is open both to Brazilian as international investors. We have European American investors, Asian investors. So yeah, it's we have the website in two languages, so English and Portuguese, so anyone can choose. And our investment letters and presentation material is written in both languages. So yeah, it's very democratic.
Oh, great. Okay, great. So, Fernando, it was a huge pleasure talking to you. I learned a lot. And well, see you next time. Thank you so much.
Thank you, Victor. Hopefully we can do this again sometime soon. It was a pleasure.
Of course. Take care. Bye bye.
Bye.